Well, aloha, Tulsi Gabbard and the rest of the world. Welcome to Friday morning. I'm going to do a quick update. This is my Twitter feed, and if you're not following me, you can go and check out ArcisFX on X. Now, there's a few interesting things that I've pointed out over the last couple of days. You can see that the 10-year yield is rallying sharply. Yesterday, I commented on the dollar index, the NASDAQ, and the 10-year yield and put these charts up. This is the dollar index bursting up yesterday through resistance into that order block above us. That's going to prove a challenge, but we are in there already this morning. We'll have a look at the chart later. Now, the 10-year yield, same sort of thing. We've rallied up again today, up towards the top of this bracket, and again, we'll have a look at that. So we've got the dollar going up, the 10-year yield going up, but also the NASDAQ. Now, yesterday didn't close down here. We'll have a look at the chart as well on this. We closed above this green line, which is the 20-period moving average, and actually reversed this direction completely. The truth is, we've been in this range since February, and it's characterized by lots of sharp moves up, followed by moves down, or vice versa. So the move yesterday doesn't mean that this topping process is now over and the market's going to rally. And we may well just flip-flop again today, like we've done many, many times over the last couple of months. We're hedged on half of our short position, and we'll see how we go today. If we do close higher than the recent high, then I'll have to hedge the rest. But I'm not convinced that this is going to carry on moving up today, and I think we may have a bear trap followed by a bull trap. Now, as I started this video, the gardener's just switched on his lawnmower outside my window, so I hope you can hear me okay. A couple of things on natural gas. I covered that quite extensively yesterday. We're still long at the bottom of this channel. We did break down through it a wee bit, but not much, just down to the bottom of the swing low. And I'm still aiming for $2, the top of this channel, and we'll have a look at that chart too. And then a couple of videos. Go and check out this one from JP Morgan, calling for a rate cut to fight inflation. And there's one the very next day, yesterday in fact, where the ex-Treasury Secretary in the US calls for a rate hike to combat inflation. So at face value, just from those two, you can see there's a bit of conflict going on about this, and so on and so forth. We talked about the 10-year and various videos. Also, cocoa, we've been talking about a lot. Looks like we're trying to form a top on cocoa. We'll look at that chart too, and then a few other things. Let's go across to the charts. I don't want to take too much time on this. This is just a brief update, really. Next week, I'll be doing a longer live stream, so make sure you subscribe if you don't want to miss that, and press the notification bell. So on these majors, on the euro, for example, we've broken down out of this rising channel. So that's pretty bearish, but we are into support. And a lot depends on what the dollar index does and yields and what the Fed's got to say. Bostic and another Fed speaker are on later on today. And there's not much news apart from the Michigan survey later and the oil rig count. And so far today, the UK GDP number came in fractionally above zero. So I suppose technically still not in a recession, although I think on the quarterly basis there might be. So pound and euro both weak, the dollar index rallying back into this resistance block as I explained earlier, and we'll have to see how we go here. I think generally, however, I'm still bullish on the dollar until the interest rate differentials adjust around the world, and until we see sharper and steeper economic decline in various countries, but obviously the US, and we start to see things falling apart and crumbling, and the Fed begin to think about cutting rates, which may not be for quite some time now, then we should see the dollar continue to retain strength. I know there's a lot of bearish sentiment about the dollar and all sorts of talk about central bank currencies and Bitcoin and gold supplanting the dollar, but I'm not too sure about that myself. Let's see how we go into these resistance blocks. We've got one that we're plunging into right now, and then another one a wee bit higher. Note that this one's all the way at 107 and we're 105.60 now. We're also short dollar yen, but I've hedged this now as well. I have to say now that unless the Bank of Japan intervenes, which it's actually talking about doing, this is probably destined to go higher. So that's the reason I've hedged. I haven't hedged all of it yet, and I'm going to wait for the end of this week. It's possible that the Bank of Japan could intervene today, either during the US session or just afterwards, and plunge this back down towards the bottom down here. I'm going to be updating my members every hour today to keep abreast of these hedges, but we're doing okay, and we've just got to be nimble. And then the yen crosses continue to look weak. Euro yen folding over quite nicely, and the Swiss yen, well, looks like a sort of a bear flag, really. And if you were trading the Swiss yen and the euro yen, and you're not too tied up in dollar yen, these might be worth a go. Let's go over to stocks. We've got NASDAQ, S&P, AMD, Nvidia, Apple, Tesla, all on here. Our positions are short NASDAQ, but now slightly hedged. Short Nvidia and long Apple right from the bottom here, literally at 168.50, I think it was. Massive move up on Apple. And Tesla we long from near the bottom as well. So we're doing really well on these hedges. Not so great on the NASDAQ and Nvidia. But that might all turn around today. I don't know. That's why I'm hedged. So we'll keep an eye on those. I wouldn't be surprised, actually, if this is a bull trap now following the bear trap. And we just got to be very careful. The best thing to do if you're in doubt, if you're able to, and if you're in the US, you'd have to use two trading accounts, is to hedge when you're in doubt, and only exit your hedges when everything has settled down and cleared up. I'm going to do another video on hedging next week, but the general rule of thumb is don't hesitate to hedge. If you're not sure about something, hedge it, and that gives you time to decide what to do next. So let's say, for example, and I'll give you a real life example, and this is a trade that we're actually in. I sold gold at 23.20 after just having poked up through the top of this channel line. Let's expand this chart. When it became clear after Wednesday's dip down towards the channel line, and then we reversed on Thursday, I immediately hedged the entire position at 245. That's right down here. We're now at 23.95, so I'm $50 in profit on the hedge. And then I've got the floating loss on the short. The gap between the two is only $25, and it will remain as such until I adjust the hedge. At some point when this tops out, I'll take profit on my hedged long position. I'll add another short position because I've only got a 50% size trade on this. And then I'll be short from the top and short from 23.20, having banked a profit of $55 or something like that at this point. So because I've hedged early, I'm now able to exit that hedge actually at a profit and retain the short trades. Of course, that can go horribly wrong if the market carries on going up once you get out of your long hedge. That's why it's best to wait for 4-hour and daily chart reversals before committing to removing the hedge and taking profit on that. Right, on the energies page and cocoa, we're long on URA, that bounced up beautifully yesterday. Long on UEC, that bounced up beautifully. So we're still in the channel, but heading upwards on URA, and UEC working its way back into resistance where we rejected the first time. So we're long on strong on both of those. And then natural gas, we went long at the bottom of this very short-term channel. This channel is very short, it's very tiny, so it's not that significant, but it does form some sort of structure. Now that we've broken it and fallen through, we'll have to see what happens when we back test the underside of it and these moving averages, starting with the 100 and the 200 just above the channel bottom. We've just found support at this swing low. We're below $2. I'm long on natural gas. I've got a reasonably healthy position on this, looking for a target of $2, $2.15 or $2.20, and then $2.35 or $2.40. This is not to say that we can't drop back down again to 1.65, 1.5, and possibly even lower, but I still think that's the less likely scenario. And then WTI, we're short on, again, a bit of a contrarian trade. We're short at the two red arrows, so we're out of the money on this one, but it hasn't gone far enough up for me to add more shorts, ideally into this region here in the low 90s. With a bit of luck today, and we've got the oil rig report coming out later, we'll break back down into the channel, down to the center line and the 250 moving averages, down to the bottom, through the bottom, and then lower. My overall target on WTI is down in the 50s and then possibly even lower. Right now on this chart, what's the 10-year yield going to do? We're right up into this resistance block, this order block, but we're in the center of the channel. We're just above the center line, and a week or so later, even though we had that big surge on Wednesday, in this technical pattern, we're pretty much where we were, actually just in the center of the channel. So we haven't reached the top and we haven't reached the bottom since the 1st of April, so the jury is still out on the 10-year yield. Of course, if the Fed's talking about hiking rates and so on, and other countries are thinking about cutting rates, we might see the 10-year yield carry on going up. And that's going to put pressure on stocks, Bitcoin and gold and various other things, including natural gas and oil and so on. So it's a real hot mess right now, as my friend in Texas likes to say. Now, Bitcoin we're long from 67,700, and I've hedged the whole lot at 70,000 and a bit. So we've locked in the profit on that, and we'll have to see how that goes. I'm not convinced either way. We've got this triangle pennant forming, which is a bullish pattern, in the center of this rising channel. So even though we've got this pennant, which is a bullish pennant, we're kind of moving sideways into the corner. Let me draw that in for you to make it more clear. And this is what the pennant looks like. So we're heading to the apex of this triangle, and it's going to break out one way or the other, but I don't know which way. It could reach up to the top of the channel, or it might reach down towards the bottom. If we do get to the bottom, around about 60,000, maybe 62, I'll consider exiting the short hedge and adding some more to the long side. Coinbase just going sideways. I haven't been trading that. And VIX really just trying to get out through the top of this pattern, but not able to do so. The VIX might actually give us a clue, because sometimes this leads the NASDAQ and the S&P. The VIX is related to the S&P, not so much the NASDAQ. So if we see this surging up and trying to get through the top of this channel before the NASDAQ and the S&P begin to move lower, that might give us a clue that the direction will be down rather than up. So watch that one very closely. It's just opened up for the day right there and hasn't moved at all. And then the Rand pairs, well, we're long on dollar South African Rand, and we'll have to see how that goes, still holding within this pattern. Yesterday's candle was very bullish on this pair. We broke back into the triangle, but we're still below the 200-day moving average, and the 20, and the 100, and the 50, actually, and this order block. So we've got some work to do to get up through there. But generally, I don't know, we've got elections coming up, so there'll be a lot of uncertainty about the Rand. Have a great day, and if you've enjoyed this, I'd love your thumbs up and subscription, and I'll see you in the live stream next week. Take care.